Melonheads. Today is October 18th, 2023. Top story today is what a freaking joke Western media is. That's not the top story, but that's what's at the top of my brain this morning, because for the second time this week alone, Western media has been played like a freaking fiddle by a terrorist organization. Basically, I don't want to get into the specifics of it, but the whole world is a mess last night. Tensions in the Middle East escalating all over the place. Riots breaking out at Western embassies and military installations. People jumping the fence. All because Western media is repeating Hamas talking points as if they were gospel for the second time in a week. There is so much propaganda right now, and because our press just wants to be first, they don't care if they're right or not. Accuracy journalism be damned, just be first to print with it. Forget the damage it does to the whole freaking world if they're wrong, and they have been wrong. They've been grotesquely, disgustingly wrong. That doesn't matter. You just got to be first, right? New York Times, congratulations. Hamas has played you like a fiddle. You are officially the propaganda arm of a terrorist organization. How about that? And of course, that has oil prices spiking. That has Iran now is calling for an oil embargo against Israel this morning. What a mess. What a freaking mess. It is just an absolute CF in that part of the world. And look, Western media, I bash the press all the time here, just from the financial end of it, how they just toe the party line and they just say whatever is handed down from on high. And then when it comes to this story and what's going on in the Middle East, whatever will just cause human civilization the most damage, that's what they report first. And then they slowly walk back the headlines. Version 1 will be totally incorrect. Version 2, they'll soften the language. Version 3 will say something totally different in the headline. That's what the New York Times did yesterday for the second time this week. Elsewhere, oh, by the way, I just want to remind everybody, you keyboard warriors in the comments, guys, we are not going to litigate the Israeli-Palestinian conflict in the chat here, so please, let's just keep it to finance this morning. It's the biggest story in the world this morning, so I had to address it. We're going to leave it there. All right, let's move on. The Bank of Japan last night announced an unscheduled bond buying operation, and as my moderator, Mish, said this morning, they really might want to seriously consider dropping the word unscheduled because we all knew this was coming. Interest rates on the 10-year Japanese government bonds have been rising very quickly in the last few days, and the Bank of Japan has decided they're going to step in. They're going to buy their 10-year Japanese government bonds along with a couple of other durations. Buying those bids up the price, and it pushes down the interest rates. Now, Japan has been an outlier in the central bank situation around the world for these last few months because, like here in the U.S. and in Canada and Australia and in Europe, we have been raising interest rates at the fastest rate since the 1970s, possibly faster. I haven't actually compared the two. But we have really been raising rates at an astronomical pace over here in the West. Japan has still been holding theirs down. Our interest rates on our 10-year treasuries have gone from a low of like 0.5% all the way up to right now they're at 4.8, pushing 5%. Japan's 0.8 still. So Japan is still doing this yield curve control. They're still trying to suppress the interest rates on their bonds. Last night, they announced that they were doing that again. Also going on this morning, we had China reported GDP of 4.9% economic growth year over year, which, if you believe that, I've got a bridge I want to sell you, a bridge made with garbage Chinese steel that was built in a week, and I'm sure is totally safe to drive across in your Chinese electric vehicle that may explode and burn while you're doing so. Anyways, suffice it to say, I'm skeptical of this Chinese GDP data this morning. And speaking of China, how about the elephant in the room, Country Garden? The clock came and went, guys. That deadline that we were talking about yesterday for Country Garden, you know, the largest developer in China, that they were going to default on a $17 billion pile of offshore debt with cross-default provisions. Yeah, that deadline came and went. Anyone? Hey, China, you got Country Garden? Anyone? Is this thing on? Somebody want to give us an update? Did they default? Didn't they default? Did you guys get paid? Mom, they're not talking about it. It's like Schrodinger's solvency. If you don't actually say the word insolvent, if you don't actually say the word default, then it doesn't actually happen, right? We saw the same story play out this way at Evergrande. The deadline came and went, and nobody said anything. This was last year when they first defaulted. Everybody's just like, oh, yeah, deadline came and went. How about those Jets, huh? Jets. No, they didn't pay. It looks like Country Garden has defaulted and everybody's just zipping their lips, pretending like it didn't happen. So for the second time in a year, and in one calendar year, a huge developer in China has defaulted on their debt. And this is a big one. Country Garden was even bigger than Evergrande. So while China's saying, oh, yeah, 4.9% economic growth, everything is great, unicorns and rainbows over in China, the property market continues to collapse. And turns out there was a little bank run in China last week. How did I miss that story? Some little regional bank had a bank run. People were getting arrested for it, spreading rumors about problems at the bank. That story came out of nowhere, got very little coverage. So we got one fine mess in the world going on today, folks. That's enough good news for one day. Let's shrink my big melon of a head and see what's going on in markets. And I did not share my screen this morning. I am remiss. Here we go. Let's see. Well, by the way, please, folks, like this video and subscribe to this channel. We do this every morning. I'd love to have your coffee with me and the melon heads every morning for the Morning Update Live. The Fear and Greed Index is sitting right there at 35 again, right in the middle of the fear territory. It's been here for a little over a week now. S&P this morning is down about 20 points or about 0.46% ahead of the opening bell. The Dow is also down about 84 points or a quarter of 1% ahead of the open right now. The stocks moving south, not really in a big way. The NASDAQ is down more than the other indexes, 101 points lower. That's two-thirds of 1% lower on the NASDAQ this morning. Look, we opened yesterday down big. Interest rates were spiking like crazy yesterday morning. Somehow somebody stepped in and started buying up stocks yesterday. I don't know who it was. Yesterday was definitely not a risk-on day, if you ask me, and yet people were buying stocks. It didn't exactly smell right. And the U.S. dollar was also kind of wonky yesterday. There was a big sell-off in the dollar and then a big rally in the dollar. I'm sorry, there was a big rally and then a big sell-off. Trading yesterday was unusual. Anybody who's watching the interrelationships between precious metals and interest rates and the dollars and stocks, yesterday made no sense whatsoever. The U.S. dollar this morning is a little bit higher, 9 basis points at 106.33. And looking over at bonds, it looks like bonds are a mixed bag this morning. We got yields on the long end have turned positive once again, 4.878 on the 10-year. I skipped right over the 30-year. 4.973 on the 30-year. That's up 2 basis points. The 10-year is up 3 bips this morning at 4.878. We'll say 4.88. The 2-year yielding 5.2. That's actually down 1 point. And the 1 month is flat, yielding 5.412. So we got negative to flat at the short end. The long end continues to rise. This is unusual, guys. We're seeing the uninversion of the yield curve right now. We're seeing the long end of the yield curve, the longer dated stuff, the 10s, the 20s, and the 30s. They are moving much higher at a very quick rate. Meanwhile, the short end of the curve, the 1 month, 2 months, and the 3 months, they're kind of sitting still. Now, typically when the yield curve uninverts, it's because there's panic in markets and the Federal Reserve decides to Zerpenburr and they just lower interest rates all the way down to zero in order to stimulate lending into the economy and try to recover from a recession. But that's not happening right now. The Fed is holding here higher for longer, and the long end of the curve is rising alarmingly fast. You're hearing phrases like bond vigilantes being thrown around an awful lot lately in the financial press. Now, bond vigilantes, kind of stirs up images of like Batman or the Punisher, like these investors who are out to punish the government. It's really just people who look at the fiscal situation of the government and say, you guys are full of it. I want a higher interest rate in exchange for loaning you money. And so we're seeing the uninversion of the yield curve, but in a different way than we usually get. We're seeing the long end rise instead of seeing the short end fall. That is terrible news for the housing market. That is terrible news for the auto market, for credit cards, if you ask me, for banks, because banks own a lot of these bonds that they bought during the pandemic when the Federal Reserve told them, don't worry, guys, we're not going to raise interest rates until at least 2024 at the earliest. How's that working out for you, Fed? Whoops, did we say 2024? We meant 525 basis points worth of hikes in 1 year. Yeah, that didn't work out so well for Silicon Valley Bank or for Bank of America, who's sitting on a $131 billion pile of unrealized losses that they're conveniently just ignoring the same way Country Garden is ignoring their default. Looking at the rise in the 10-year Treasury, here we go, guys. We got that close yesterday above the prior high. I was saying, watch that level there around 4.8. Well, we closed above that, and it looks like we're heading even higher today. This is going to break something. I've been saying this for the better part of a year now, guys, but eventually this is going to break something. There is going to be a spectacular implosion of some hedge fund or some pension fund or some bank. It's going to be bigger than Silicon Valley Bank, and it's going to happen. If I could tell you when and who, I'd be a billionaire by now, and I wouldn't be doing this. But I can tell you it is a mathematical certainty. If these rates on the long end keep rising the way they are, something bad is going to happen. And looking over at the commodity board, guys, gold and silver, this is one of the things that had me and a lot of other people scratching their head yesterday. Gold did remarkably well yesterday. Interest rates, the 10-year treasury was up, 12 basis points yesterday, and gold was green on the day. Guys, that doesn't happen. That's not supposed to happen. When interest rates rise, bonds are typically considered competition for precious metals. And when interest rates on the bonds rise, the bonds become more attractive than precious metals because precious metals don't yield anything. So conventional wisdom is that you would see a sell-off in gold as interest rates rise as people go chase yield. That did not happen yesterday at all. Gold went up yesterday while interest rates were rising. That's different. This playbook of the last 50 years or the last 20 years, the way things have been since the GFC, throw it out, guys, because things are behaving differently right now. I talked in my Friday live stream about how we may be entering this whole new era of much higher interest rates that we're talking measured in decades, not months. Well, this behavior of gold and silver right now could be an indicator of that. Gold should be tanking. Silver should be tanking with interest rates doing what they're doing, but it's not. It's holding up very well. And here's one of the top stories today. Again, guys, I don't want to go into the humanitarian end of things and the ludicrous behavior of Western media yesterday, but I will talk about this story because we have seen this one coming. Oil jumps as Iran steps up rhetoric with calls for an Israel embargo. Iran calls for an oil embargo against Israel by Muslim nations. Brent crude climbs toward $93 a barrel, while WTI also gains. Oil leaped higher after Iran called for an embargo against Israel by Muslim countries following a deadly explosion at a Gaza hospital that raised the risk of wider hostilities in the Middle East. You'll notice the wording there. They're saying following a deadly explosion at a Gaza hospital, when yesterday they just automatically assigned blame based on the Hamas talking points. They're being a little more careful with their wording today. That's all I'm going to say about that. Brent futures rose 3% to trade near $93 a barrel. Iran's foreign minister called for a full and immediate boycott of Israel by Muslim countries, including an oil embargo on the country. Now, guys, the reason why I'm talking about this story is because eventually Iran is going to win over other Arab countries and Muslim countries to their cause, and they will join in this oil embargo of Israel, and I suspect that will be expanded to include the West, the United States, and possibly even Europe. Oil is the biggest weapon that they have. They can't fight a conventional war, so they will try to fight this way. I'm surprised it took as long as it has for them to start talking about an oil embargo, but that is the takeaway here. The words oil embargo are finally being used. Now, they're only targeting at Israel right now, but when they target Israel, they lump us, the U.S., in with them all the same. We're indistinguishable to them. Looking on the oil chart right now, West Texas Intermediate, it actually just swung negative. I guess that is as the hysteria and as the Western press starts to walk back their ridiculous coverage of what happened yesterday. But oil still remains above the 50-day moving average, trading at 87.51 on West Texas Intermediate futures. Now, I'm not going to talk too much about China's GDP because, to be honest with you, it just strikes me as bogus. China's surprise on GDP, partly due to revisions, economists say. They're already starting to pick apart the way China is treating their deflation and their PPI and the way it's creating the illusion of economic growth. I'm not going to get too far into this. China GDP was reported at 4.9% year over year. They're saying, yeah, we're definitely going to hit our 5% goal now. But let's talk a little bit more about this story, which we did not hear about today. Country Garden default talks swirl as offshore debt deadline passes. Now, notice they're not saying Country Garden defaulted. They're saying Country Garden default talks swirl because Country Garden won't say whether they defaulted. The Chinese government won't say whether they defaulted. The clock ran out, the buzzer went off, and the ref just didn't blow his whistle. I mean, everybody can see the scoreboard. We know who won, but nobody's actually saying anything. The clock just stopped. So did they default or didn't they? Well, let's read on here. A Country Garden $15 million coupon payment deadline has expired without word of payment, fueling expectations that China's biggest property developer has defaulted on its offshore debt as the nation's real estate woes deepen. Non-payment would trigger cross defaults in other Country Garden bonds, as is standard in bond contracts. The company has almost $11 billion of offshore bonds, and a default would set the stage for one of China's biggest corporate debt restructurings. Now, they're just saying the clock ran out. Now, here, you know, we can't talk about a Chinese developer without the obligatory anonymous quote. One bondholder of the tranche in question, who declined to be identified, discussing confidential information, said he had not received payment on the coupon as a 30-day grace period ended. So we've got nameless guy, you know, person who refused to be identified. Amazing. This guy's quoted everywhere. He really gets around. He's saying we didn't get paid yet. The clock ran out. If they had been paid, we would probably have heard about it, like we heard last month when their prior 30-day grace period expired and they made a payment with hours left to spare on the clock. Country Garden has warned that they probably won't be able to make this payment. The clock has run out on them making the payment. We've got this anonymous dude saying they didn't pay me. So I guess they defaulted, but I can't confirm it, guys. I don't have positive confirmation. And look, I started the whole stream with this rant about how ridiculous Western media is and the way they don't confirm their sources and they just spout off. So I got to put a question mark. I got to put an asterisk next to this one. We don't have confirmation of whether Country Garden actually defaulted. They probably did, but we don't know that for sure. Now let's talk about the Bank of Japan. Oh, I'm sorry. One more topic about China before we move on to the BOJ. This is a few days old. How did I miss this story last week? Chinese officials urge calm after Evergrande fears reportedly spark a small bank run. What? Another small bank run in China and I missed it? Whew. Guys, I did not bring my A game last week. I don't know what to tell you here. Fears that Evergrande's debt woes are spreading into the wider financial industry have sparked a run on a regional bank in northern China, multiple state media outlets have reported. Depositors lined up at the bank in, I'm going to butcher this one, Kangzhou. How's my pronunciation, guys? Depositors lined up at a bank in Kangzhou in Hebei province to withdraw their money, according to photos and videos circulated online this week, prompting an appeal for calm by officials. Police in Kangzhou have arrested many people suspected of spreading rumors that the bank was suffering a cash crunch because of its exposure to Evergrande. Yisai, a state-owned media outlet, reported on Wednesday, citing an officer deployed at the bank. So I guess that's what they're going to do. Like, they're just going to arrest anybody who spreads a rumor about a bank not having enough money. Look, I don't know if this was a legit bank run or if this bank collapsed or if they froze withdrawals. There's almost no details. They're arresting anybody who talks about it in China. So I'm not surprised that it's hard to get details or that the CCP was able to squash this story. But I've always worried that the situation with Evergrande and with the developers and the property market, well, these banks made loans to the developers. The loans aren't getting paid back. The buildings that they built are not cash flowing. So the banks don't have the money that they loaned out. Well, that money that they loaned out, that was their depositors' money. So once depositors get wind of the fact that, hey, this bank lost a lot of money on these Evergrande bonds or these Country Garden bonds, people start showing up to withdraw their cash. And then it becomes a stampede as one person sees somebody lined up to get cash and says, well, I better get mine out too. I better get mine out too. Now you've got a bank run. And of course, China just says the solution is to just arrest people. Okay, good luck with that, China. See how that one goes over. All right, moving on. Bank of Japan to conduct an unscheduled bond buying operation. I'm going to spare you guys the details of this, of what they're going to buy, but they're basically spreading it out all across the long end of their yield curve. The Japanese central bank, the BOJ, they are either using their own reserves or they're printing yen to buy bonds, to raise the prices of those bonds, and to suppress the interest rates. Why are they doing that? Because Japanese government bonds have been rising rapidly. Now, this is going back, these are 1-minute candles, so we're only going back a couple of days here. Actually, this is like mid-July. You can see what the interest rates on the Japanese 10-year JGB has been doing. It started off around 0.4%, and then it rose up to about 0.48, and then it spiked up to about 0.55, spiked up to 0.6, spiked up to 0.7, and now we're sitting here around 0.8. Japan has said they're going to maintain their bonds somewhere between 0 and 1%. It seems like the bond market is basically driving this right up to that 1% threshold that the Japanese government has said we're not going to let it go above that. And so the BOJ has been announcing these unscheduled bond buying operations to slow that rise as this has been happening. Now, interestingly enough, there has not been any reaction in the Japanese yen. This is looking at the Japanese yen as measured against the US dollar. It's still sitting right around 149 yen to the dollar, even though the Japanese government is buying bonds, or the Japanese central bank is buying bonds right now. Typically, when a central bank steps in to buy bonds, that's kind of QE. I don't know if Japan is spending down their existing reserves or if they're printing yen to do this, but typically the yen would weaken when a central bank has to come in and buy the government's debt. That's not happening today, but we also have this unofficial resistance line right here around 150. This is historically where the Japanese would step in and start selling U.S. government debt or start selling their dollar reserves in order to keep the yen from going above this level. It's possible that is also happening right now, although I think we probably would see a move down in the Dixie if that's what the Japanese were doing. So keep an eye on this level right here. If you see the yen break above 150 to the U.S. dollar, that would be a significant breakout. Significant technical event. And I have some thank yous I got to send to Miss Madison Hypes. Thank you, Madison. Says, stupid question. What problems are created when bond yields rise at the levels we're seeing? Thanks for the show. Not a stupid question, Madison. Thank you very much for the super chat. I appreciate that and the support of the channel. The question is, we are a debt-dependent society. Every facet of our economy is dependent on debt. Our government is dependent on borrowing money. They run constant deficits, over $1.7 trillion last year. So our government is constantly borrowing money, paying interest on that money. So as the interest rate rises, the government's borrowing expenses goes up, which means the government has to issue even more debt to pay the higher interest rates. We have a housing market that is 100% dependent on debt, on the availability of mortgages. So while interest rates on U.S. government bonds rise, that also drives up the interest rate on mortgages, which are based on those government bond yields. Our auto market is dependent on debt. Very few people buy their cars for cash. Everybody finances their cars, right? Well, if the interest rates on government bonds are rising, it gets more expensive to finance a car. So if it gets more expensive to finance all these things, well, then the price of those things doesn't have to move. They become more unaffordable, right? The same price house with a higher mortgage rate, that's a much bigger monthly payment, even though you're not paying any more for the house. You're just paying a lot more in interest. That's money you're just flushing down the toilet. So as interest rates rise, it tends to put downward pressure on asset prices, the price of houses, the price of cars, the price of stocks, and everything else. Now, we're not really seeing that yet because the economy, especially the housing market, is kind of frozen in place. People locked in their 30-year mortgage in 2020 at 2.5%. So they're not selling their houses, but there's also nobody buying their houses. So the housing market is just kind of frozen in place here, waiting for something to move. Any sudden new housing supply would send this market sharply lower. So the other thing you got to worry about is we have a lot of zombie companies. A lot of companies, they just don't make money. The only reason they exist is because they can issue bonds, they can borrow money, and then they can use that to sustain cash burning operations. Well, if borrowing gets more expensive, they may not be able to do that. So you could also see a spike in unemployment being caused by higher interest rates. Thank you very much, Madison, and I appreciate your question. It was a very good question. And thank you, Heather Y. I appreciate the super chat. I didn't see a comment behind that one, Heather. Did Miss Shen? Nope. Well, just being a swell girl. Thank you very much, Heather. I appreciate the super chat, the support of the channel. Thank you very much. And the inflation situation. Thank you, sir. Says great work, Jack and team. That's all. I hear the mods are trying to organize a union, just so you know. LOL. Uh-oh. Mish, are you unionizing? That's clearly, that's nothing but misinformation. I swear. You've been misinformed if you heard about that. I hope the mods don't unionize. I don't know. I'll have giant inflatable rats blown up out in front of my house. Thank you very much. The inflation situation. I appreciate the super chat, the support of the channel. Thank you, everybody, for spending your morning with us this morning. I appreciate it very much. Thank you to my Patreon supporters for everything you guys do for the channel. Looking forward to having our Zoom call this afternoon. I believe is it 1 or 2 o'clock p.m. Eastern time. Don't quote me on that. It was one of those. I forget which time it was. But go to the Patreon page and you'll see it there. Link down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Till next time, live small and dream big.